In 2009, the world met Bitcoin. It was a new idea. Money, but digital. No banks or governments involved. A person or group using the name Satoshi Nakamoto created it. Bitcoin promised a different way to handle money. It was a mystery. It was exciting. But few understood it. Even fewer used it. At first, Bitcoin was just an idea discussed online. Programmers and tech enthusiasts were curious. Could this really work? Could you really have digital money that wasn't controlled by anyone? The early days of Bitcoin were quiet. The first real-world transaction happened in 2010. Someone bought 2 pizzas with Bitcoin. It cost them 10,000 Bitcoins. Today, that would be worth millions. Slowly, the price of Bitcoin started to rise. More people were paying attention. Online forums buzzed with activity. Bitcoin exchanges popped up, allowing people to trade it. But there were problems too. Bitcoin was still very technical. Most people didn't understand how to use it. And because it was so new, its value went up and down quickly. From 2013 to 2016, Bitcoin faced its first big test. The price soared dramatically, capturing the attention of investors and tech enthusiasts alike. It went from around $100 to over $1,000. This meteoric rise created a buzz in the financial world. People were excited, and many started to believe that Bitcoin could be the future of money. Conversations about Bitcoin's potential were everywhere. Was this the future of money? Could this digital currency replace traditional financial systems? The possibilities seemed endless. But then came the crash. The euphoria was short-lived as the market took a sharp downturn. Mt. Gox, a major Bitcoin exchange, collapsed under the weight of its own mismanagement and security failures. Millions of dollars in Bitcoin vanished overnight. People lost trust in the system. The price plummeted, and the dream of a decentralized currency seemed to be in jeopardy. This was a harsh lesson for many. Bitcoin was still risky, and the market was highly volatile. Investors were worried, and the future of Bitcoin was uncertain. It wasn't as secure as some thought. The vulnerabilities in the system were exposed, and people began to question the safety of their investments. But even after the crash, some people still believed in Bitcoin. They saw its potential to revolutionize the financial world. These enthusiasts continued to invest and support the development of the technology, hoping for a more secure and stable future. Developers and innovators worked tirelessly to improve the technology. They focused on enhancing security, scalability, and usability. The community was determined to learn from past mistakes and build a stronger foundation for the future. Conferences and seminars were held worldwide, bringing together experts and enthusiasts to discuss the future of Bitcoin and blockchain technology. These events fostered collaboration and innovation, driving the industry forward. Despite the setbacks, Bitcoin adoption continued to grow. More businesses started accepting Bitcoin as a form of payment, and Bitcoin ATMs began to appear in various cities, making it easier for people to buy and sell the digital currency. The price of Bitcoin slowly began to recover, and optimism returned to the market. Investors who had weathered the storm were hopeful for a brighter future. They believed that Bitcoin's potential was far from exhausted, and that the best was yet to come. The years 2017 to 2020 were a wild ride for Bitcoin. The price exploded. It was a time of unprecedented growth and excitement in the cryptocurrency world. Bitcoin, which had been relatively obscure to the general public, suddenly became a household name. The digital currency's value skyrocketed, capturing the attention of investors, media, and everyday people alike. It reached an all-time high of almost $20,000. This milestone was a significant moment in the history of Bitcoin, marking its transition from a niche digital asset to a mainstream financial phenomenon. The surge in price was driven by a combination of factors, including increased media coverage, growing interest from institutional investors, and a general sense of FOMO, fear of missing out, among the public. Everyone was talking about it. From financial news networks to social media platforms, Bitcoin was the hot topic of conversation. Analysts and experts debated its future, while enthusiasts shared their success stories and predictions. The buzz was palpable, and it seemed like everyone wanted a piece of the action. Even your grandma knew about Bitcoin. What caused this surge? The answer lies in a combination of technological advancements, increased adoption, and speculative investment. As more people learned about the potential of blockchain technology and the benefits of decentralized currency, interest in Bitcoin grew exponentially. More people were using Bitcoin. Businesses started accepting it. Major companies began to see the value in offering Bitcoin as a payment option, further legitimizing its use as a currency. This increased acceptance helped to drive demand, as consumers found more ways to spend their digital coins. And investors were pouring money in, hoping to get rich quick. The allure of quick profits attracted a diverse group of investors, from seasoned traders to first-time buyers. Cryptocurrency exchanges saw a surge in activity as people rushed to buy and sell Bitcoin, hoping to capitalize on its meteoric rise. But then, just like before, the bubble burst. The price crashed. The rapid ascent of Bitcoin's value was unsustainable, and eventually, the market corrected itself. This sudden drop in price caught many investors off guard, leading to significant financial losses for those who had bought in at the peak. It went back down below $10,000. The dramatic decline served as a stark reminder of the volatility inherent in the cryptocurrency market. What goes up must come down, and Bitcoin was no exception. The crash left many questioning the long-term viability of digital currencies. Many people lost a lot of money. The hype died down. The initial excitement and optimism were replaced by caution and skepticism. Investors who had hoped to make a quick fortune found themselves facing substantial losses, and the broader public's interest in Bitcoin waned. This period showed how volatile Bitcoin could be. The wild price swings highlighted the risks associated with investing in cryptocurrencies. While the potential for high returns was evident, so too was the possibility of significant losses. This volatility became a defining characteristic of Bitcoin and other digital assets. It was exciting, but also dangerous. The thrill of potentially making a fortune was tempered by the reality of the market's unpredictability. For many, the experience was a roller coaster of emotions, with moments of euphoria followed by periods of anxiety and uncertainty. It was a roller coaster ride. The journey of Bitcoin from 2017 to 2020 was marked by incredible highs and devastating lows. It was a period of rapid growth, intense speculation, and dramatic market corrections. Through it all, Bitcoin continued to capture the imagination of people around the world, solidifying its place as a revolutionary force in the financial landscape. Since 2021, Bitcoin has continued to be unpredictable. It hit a new all-time high in 2021, going over $60,000. But then it crashed again. What's driving these changes? Several factors are at play. Global events like the COVID-19 pandemic have an impact. Governments are starting to regulate Bitcoin, which creates uncertainty, and more companies are getting involved, which can push the price up or down. So, what's next for Bitcoin? This question has been on the minds of many since its inception. Bitcoin, the first and most well-known cryptocurrency, has already made significant waves in the financial world. But its journey is far from over. No one knows for sure. It's still a very new technology. But here are some possibilities. Bitcoin's future is a topic of much speculation and debate. Experts, enthusiasts, and skeptics alike have their own predictions. Let's explore some of the potential paths Bitcoin might take in the coming years. Bitcoin could become more mainstream. more people and businesses might start using it for everyday transactions. Imagine a world where you can buy your morning coffee, pay for your groceries, or even purchase a car using Bitcoin. This widespread adoption could revolutionize the way we think about money and transactions. Already, some businesses are beginning to accept Bitcoin as a form of payment, and this trend could continue to grow. Governments could play a bigger role. They might create their own digital currencies or regulate Bitcoin more strictly. The relationship between Bitcoin and governments is complex. On one hand, some governments see the potential benefits of digital currencies and are exploring the creation of their own. On the other hand, there are concerns about regulation, taxation, and the potential for misuse. Stricter regulations could either stifle Bitcoin's growth or provide a more stable framework for its use. New technologies could emerge. Something even better than Bitcoin might come along. The world of cryptocurrency is constantly evolving. Developers are always working on new technologies and improvements. It's possible that a new cryptocurrency could be developed that addresses some of the limitations of Bitcoin, such as transaction speed and energy consumption. This new technology could either complement Bitcoin or replace it as the leading digital currency. One thing is certain: Bitcoin has changed the world. It has shown that digital money is possible. It has challenged traditional financial systems, and it has created a lot of excitement and debate. Only time will tell what the future holds for this revolutionary technology. As we look to the future, it's clear that Bitcoin has already left an indelible mark on the world. Whether it continues to rise in prominence or is eventually overshadowed by new innovations, its legacy as a pioneer in the digital currency space is secure. The journey of Bitcoin is a testament to the power of innovation and the endless possibilities that lie ahead in the realm of digital finance.